Welcome to Houston House at South by Southwest. Climate change is one of the most pressing challenges of our time. Its impact on the environment, the global population, and the economy are undeniable. With global demand forecasting an ever-increasing need for energy, climate change poses both a responsibility and an incredible opportunity for the sector. Energy giants and startups alike are preparing to meet this demand with a heightened focus on decreasing environmental impact and the development of new technologies. Players across the capital spectrum today are looking to invest in a wide range of companies developing low-carbon technologies, and the money is flowing. Join private and corporate investors as they discuss the heightened importance of venture in the energy transition space and where the largest opportunities lie for energy transition technologies.
My name is Vidisha Prasad. I'm the managing partner of Adya Partners. We're a venture capital firm in Houston focused on two primary strategies. One is late-stage private secondaries. We buy out long in the tooth VC funds and investments within those funds. And my own background for the last 20 years has been in energy. So we also do early stage venture capital in energy and energy transition names. I've joined here by an exceptional group of investors, all of us based in Houston. And so before we kick off the panel, maybe I'll ask everybody to give a brief introduction of themselves and the funds that they represent here.
Hi, I'm Shawn Cumberland. I'm one of the managing partners at EnCap Energy Transition. I've been in the power development investing business for about a little over 30 years after a brief start as a lawyer in the 80s. EnCap is a 30-plus-year-old private equity fund that really kind of started in the upstream business and then migrated into the midstream business. And then a handful of years ago, partially because they wanted to figure out what's next, but also in response to a lot of their limited partners, created this third vertical, and that is energy transition. And they staffed it with folks that have actually, like myself, have been in the power sector and watched the power sector as it has migrated. One of the very first big projects I worked on was the Teesside Power Project, which was the largest cogeneration plants, the largest steam sales. And at that time, energy efficiency was looking at cogeneration. And that was 1990 where we put the bank information memorandum together. And it had in it that we were going to lower sulfur emissions, NOx emissions, but also carbon. So 30 years ago, we were talking to the investors about the concern of carbon. And so at EnCap, they've raised 22 funds, $38 billion. We closed the first EnCap Energy Transition Fund last April and have now stood up 6 portfolio companies right now that are in battery storage, solar development, wind development, and some fuels that are based upon biofuels businesses. EnCap's business model is to back management teams as they build out their businesses. So to date, they've backed more than 240 different companies so far. So that's what we do.
Hello, everybody. My name's Grace Chan. I'm from BP Ventures. I'm pretty excited to be here today. I think the topic we're going to discuss, have a conversation on, energy transition, is pretty important, and it's near dear to my heart. I'm going to tell you a little bit about BP Ventures and what we invest in. So BP Venture was started 16 years ago. We're the corporate venture capital arm for BP. We make investments in startups that could help BP accelerate our aims to get to net zero by 2050 and help the world get to net zero. We have 15 investment professionals around the world. And shout out to my coworker sitting in the front row, Lian. We have invested more than $900 million in over 40 startups. We're very active investors. Most of these companies are actively managed by our team. We like to lead rounds. We take board seats. And we get in. Our sweet spot is Series A, Series B. And as the company grow, we support them with follow-on investments. As you can imagine, our investment spectrum is pretty broad. We touch energy. Some of our portfolio companies include carbon capture, electrification, EV charging. We have quite a few digital companies as well. And the very first investment I worked on is a geothermal company. If there's a hydrogen startup in here, I really want to talk to you, so come find me after the panel, or at least find me on LinkedIn so we can start a conversation. Again, Grace Chan, very excited to be here.
Good morning, everyone. My name is Hossam Elbadawy. I'm with SCF Partners. I manage the venture fund within SCF Partners, which is a private equity firm. Started like EnCap in upstream, but now we do investments in upstream, midstream, downstream on the venture side, and also in the energy transition. We have offices in Houston, Calgary, Singapore, Australia, and Aberdeen. We've been in business for more than 30 years, and we've done 450 investments in the history of the firm that went into 80 platforms. So our specialty used to be roll-up strategies, and then take some of these companies public. So we took about 18 companies public. Actually, 30% of the OSX has been touched by SCF. We either took them public, or they bought something significant in their portfolio from what SCF has built. I've been in the industry for 29 years. All my career has been focused around technology and technology implementation, commercialization, from field operations to engineering and design. Spent 17 years with Schlumberger. At some point, I managed maybe a quarter of the R&D for them and manufacturing globally. And the last 12 years, I've been on the investment side. And within our current venture portfolio, which is about 9 companies, we've been doing energy transition investments recently. And I know later we'll get into what's the definition of energy transition, but we've made an investment in a greenhouse monitoring and detection company called Cube Technologies. We made an investment in the UK in a microgrid power management company called PowerStar. We're also looking at few companies now. We're about to do some investment with them in similar spaces. And the other one I would say we are trying to do quite a bit is how can we help our existing portfolio get exposure to some of the new energies and technologies. And we monitor percentage of revenue from existing portfolio that is actually switching and helping the energy transition as well. Looking forward to your questions and our discussion around the topic today.
Thanks, everyone. And by the way, we're happy to take questions as we go along. There are 2 microphones, one on this side of the room and one in the back of the room. If anybody wants to ask any questions, just line up and I'll see you and we'll take questions. So thanks everybody for the introduction. As you can see, we're all coming to the space from different angles, and the 2 words energy transition really capture all manners of things. It's a very, very vast space. In some ways, we've been on this journey over the last 20-odd years. Shawn's been building multiple businesses, multiple funds over the years to focused on the energy transition. But it means different things to different people. So I'm curious if each of us can maybe perhaps spend a little bit of time talking about what you think energy transition will look like over the next 5, 10, beyond 10 years, what the pace and shape of this transition might look like. And it's particularly relevant to those of us who've grown up in the energy space in Houston. As you might know, Houston's really the hub of the energy sector in the U.S., and it's traditionally been focused on the oil and gas space. And we're now beginning to see an incredible influx of new energy companies, new capital pools in the shift and the change is very, very palpable. But I'm curious to hear from you guys and what you think the shape and pace of change will look like both domestically and internationally over the next 5 to 10 years and beyond. Shawn or Hossam, however?
Thank you. That's a really tough question for me. In my lifetime, I'm 60, 80% of fossil fuels that have been burned in humanity have been burned in my lifetime. I've watched energy transition to be cleaner, better, more reliable, et cetera. But I think for us as a fund, it's really about the carbon and the climate piece of it. So how do we make sure that the footprint for what we do is actually going in the trend line towards the net zero? But it's in incremental bits that have to happen. In terms of like what can happen over the next 10 years, 10 years ago, I would not have predicted that solar prices would drop by 90%. I wouldn't have predicted that battery prices would drop by 90%, but they have. So all I know is there's a lot of energy that's going to fixing the problem, coming up with solutions. Funds like these that are across the table from me that are trying to figure out how do we crack the code on carbon, how do we crack the code on sequestration, on cleaner fuels. So I'm an optimist in that it took us just a short amount of time on a relative basis to get to where we are. So I'm an optimist that it's going to take about a similar amount of time to kind of get out of this quagmire that we're in and address the global issues on carbon. But I can't tell you what will happen in 10 years. There will be a lot more wind and solar and batteries added. Yeah. I know that. And I have a view that, but it's just Shawn's bum knee that says that we're going to be driving a lot more EVs.
So Shawn is 60. I don't want to tell you how old I am. But 15 years ago, an energy internship took me to Houston, and I never left. There are 3 views I have on energy transition that shaped me as an investor. I'm going to share them with you today. So view number 1, I do believe the energy mix needs to change, but it took a really, really long time to build up to the energy system we have today. It's going to, like Shawn said, it's going to take an equally long time to unwind that, transform it. I believe it's going to be a long, difficult journey, and we need everyone to come along it, and it's going to take a lot of money. Then my view number 2 on energy transition. I'm excited about renewables, but I think it takes a broader range of energy mix for energy transition. For example, natural gas. I think natural gas has a very important role to play in the energy transition. It's a feedstock for blue hydrogen. Got my colors mixed. Natural gas continue to provide essential needs around the world. Lighting, heating, it can plug the gap for intermittency of renewables. And natural gas can replace coal in emerging economies. And lastly, natural gas, when paired with carbon capture, it's a great source for low carbon fuel. And the last view on energy transition has to do with Houston. I mentioned I lived in Houston for 15 years. I see myself working here for the next 15, 20 years on energy transition. And I'll tell you why. I think Houston not only can be important in the energy transition, Houston is well positioned to lead energy transition because we got Tim. Tim's not a person. Tim is what I call talent, infrastructure, and money. So to summarize, long, difficult journey, we should have started yesterday. And secondly, you need a mix of energy for the energy transition. And lastly, Tim.
So for me to add this and coming at it from just my technical background and commercialization, I look at the problem as we have energy security we have to have, and energy has been responsible for the flourishing of our planet. And actually, if you look at just 100 years ago, the average age expectancy was 35 years, and today is much higher, about 65 or higher. So energy plays a key role. But as of late, we're all acutely aware that using the energy the way we've been using it is actually harming the environment. And to me is unacceptable that we continue on the same pace, but at the same time, the engineer mind and the practical person in me says, okay, what's the right solution? Is the right solution, turning everything into a certain energy or the other, walking away completely from a certain energy? Then I look at fundamentals. It took us 30 years for coal to reach from 5% to reach about 25% of the energy mix. Then it took us another 45 years for oil to reach from 5 to 25%. Then the last one, which is natural gas, it took about 55 years to go from 5% to 25%. So you can do the math. We're today at 5% if you put wind and solar. And just to let you know, from an engineer point of view, the power density of these technologies are way less. While oil was more power density than coal, and natural gas was even more. And it was a drop-in replacement. You could actually take a coal plant and change it into a natural gas plant, and it's possible to do. Today, you cannot take a coal plant and turn it into a windmill or wind farm. Yes, so there is a lot of friction, which informs our investment decision and the way we look at the market as what are the technologies that can alleviate the impact of things like coal, like oil, like gas, because in the short term, which we don't have a lot of time, we have to do that. So we look at things like CCUS, we look at clean coal, we look at monitoring emissions from methane as key technologies in the next 5 to 7 years that is going to play a key role. Still, the other forms of energy like wind and solar will play a role, and they will increase significantly, and we still take a position in them, but it's going to be a mix of solutions on the transition. So I define the transition as lower emissions more than let's switch from one form of energy to the other. Yes, if that makes sense for everyone.
Yeah, that's a really important point, because as we look at the hydrocarbon industry itself, there's an incredible push all around, both domestically as well as internationally, around finding solutions that can decarbonize the existing energy mix as well. In the public sphere, in the public domain, that particular approach doesn't always get appreciated as much as it probably should. As everybody here has highlighted, we're all focused, we're all investors in sort of the low carbon economy, and yet we've got a fairly realistic perspective, partly driven by our personal experiences. Everybody here on the stage either grew up in the emerging markets, or Shawn has spent a lot of time in Hong Kong. And so as I look at my own experience, my family's experience in emerging markets, the idea that we're not going to have a balanced mix, and some of that balanced mix will include fossil fuels, particularly natural gas, and as we're seeing coal still, I think the single greatest consumption for coal was last year in an absolute basis. So these are going to continue to be a big part of the mix of fuels. And yet, the history of human innovation has shown us that innovation can happen slowly, and then all of a sudden, to Shawn's point, it's hard to predict when prices will come down, but they will, and economies of scale will help. And so all of the work that we're doing here, both from our funds in Houston, all leads up to that. But I think we've all got a relatively pragmatic perspective that change is going to take some time, because it took us 100 years to build an industrialized economy. And frankly, there are big parts of the world that aren't industrialized enough that will continue to need a lot of energy, and will continue to rely in a big part on the fossil fuel space. Hopefully ever cleaner fossil fuel space, and we'll talk about some of the technologies and some of the companies that we've seen that are either certifying natural gas, or are measuring methane, or are mitigating emissions, and those are really important innovations as well, in addition to some of the new energy mix that we're all exploring here. So with that, I'm curious if folks can maybe spend a few minutes talking about, are there technologies that you're particularly excited about? And I know everybody's fund has a slightly different focus here, but maybe not even focused on your fund, but just really things that you're really excited, and things that you believe are over or underappreciated in the public conversation today.
Well, I can speak to when we did the fundraising for Fund 1, we made a conscious decision that we were going to pile into the battery storage space that would accommodate more and more renewables in the markets. And we saw that there were a lot of players that were talking about it. They were doing a lot of whiteboard analysis, but they were nervous about two things: the reliability and the technology, which was relatively new, and then the revenue model in the market that's going to associate with it. We spent a lot of time on the technology front, and then we took a macro view. At the risk of being pigeonholed a storage fund, which we're not, but we took the macro view to pile in, and we went very aggressive when we said, don't wait for permission from the banks, don't wait for the revenue contracts. The market is there. So we stood up 2 portfolio companies, invested over $500 million into them of equity to just go build the storage facilities. And so I'm really excited about what's happening in the battery space. The standalone storage industry has actually been the beneficiary of what occurred in the EV markets. It's the EVs that drove the cost of batteries down, and they still represent the preponderance of batteries that are produced, but they make a neat alliance between the two. And so as we see the further decarbonization of the grid, you're going to need stuff like storage, and then that will accommodate more and more EVs. So I would say maybe from my lens as a power person, that's what I'm really excited about.
Grace and Hossam?
Sure. I think you know I'm excited about hydrogen, and hydrogen happens to be one of BP's transition energy growth engines. And we have 4 other ones. They're bioenergy, convenience, EV charging, and renewables. So for renewables, BP has quadrupled our pipeline from the end of 2019 at 6 gigawatts to 24.5 gigawatts, and we hope to have 30 gigawatts by 2030. And for hydrogen, BP hopes to have 10% of the market share by 2030 in clean hydrogen. I'm personally very excited about our carbon capture company. There's a portfolio company called Carbon Free. They have their first gen commercial plant in San Antonio, Texas, and we're in the midst of raising funds to build the second gen first commercial plant. And I also hope it will be in Texas.
So I would say there are 3 areas we're very excited about. First is methane, around methane detection and prevention. So we, as I mentioned earlier, we made an investment in a company called Cube Technologies. We're able to put fixed sensors around field operations and very quickly detect if there's actually methane leak. This is very important for me, and I think it's a very good theme for a few reasons. One is if you look at the greenhouse gas impact of fossil fuels, especially oil and gas, you will find 80% of it is actually a methane problem, not a CO2 problem. Actually, methane is anywhere between 24 times to 84 times more potent than CO2. So by volume or by weight, methane is way more harmful than CO2. And today we leak about 1% by volume across the value chain. And as you know, methane, you can't see it and all of that, so you need detection. It's not like oil. If there's a leak or something, you identify it. So I personally think around the methane detection and prevention, leak prevention, is a great theme. And we continue to look at more technologies in it and invest in it. And this is a technology ready today. And I'm very pleased to tell you, since we've done the investment, we've installed hundreds and thousands of sensors. And oil companies are reacting, midstream companies are reacting and installing these sensors everywhere. So that's one theme. The other theme is storage, like Shawn mentioned, and we have made a small investment. We also have an incubator beside the fund. So we made a small investment in a flywheel company that came up with a new bearing that actually reduces the power consumption, which makes flywheels actually more competitive than lithium ion. So you could have, at a grid scale, a flywheel solution. What's the benefit? The benefit is in a 30-year life, you could use only one flywheel versus replacing the battery 6 times. And from an emission point of view, using a solution like the flywheel is way more advantage than battery and the mining that goes into it and so on. And you still achieve the storage. Very excited about this. And if anyone has more solutions that complement the batteries in the storage space, would love to take a look at that. Then the third one that I'm really excited about is CCUS. And I sit on a board of a company that I'm an independent director on it, that do deep well injection called Advantech, that are able to take CO2 or biosolids, biowaste, and all the things that actually could generate methane as they decompose, and deep well injection underground, which is the most efficient way of sequestering the harmful impact of these gases. So those are the 3 examples, but we're always open-minded. We look for entrepreneurs that have the insights. We never go with a prescribed, okay, here's the solution we want, let's find people who would do it for us. We're actually always looking to the entrepreneurs and the thought leaders of coming up with better solutions, and then we use our expertise to help them scale up the business, commercialize the product, and so on. So very excited about those 3 areas.
Thanks, Hossam. And Grace, if I might pick up on one of the things you were talking about, hydrogen, which is, of course, gets a lot of press and really exciting what the developments here can be. Curious how you see that opportunity set in hydrogen, both from a cost perspective as well as how it competes with other fuels, and where does that fit in your investment horizon over the next sort of 3 to 5 years? I was actually asking that question to you because
right.
hydrogen was your thing.
Sure. I don't want to give all the secrets away, but the way I'm looking at hydrogen, there's the production side, but there's also the storage transportation side. I got some awesome deal flow from our co-investor in another company that's out of Asia, and they're looking at an Israeli startup that has a really safe way to transport hydrogen, and in a way that's hydrogen storage as well. The way we look at hydrogen, in order to be clean hydrogen, you gotta produce like 2.65 tons of CO2. But there are some technologies out there, I think that's really promising, that can bring the CO2 content per kilogram down to 0.65. And that gets me super excited. And on the cost front, how do you go from $8 per kilogram to the $2 per kilogram and to the DOE moonshot of $1 per kilogram? It takes a lot of efforts, and perhaps you have to piece many of the startups together to complete that hydrogen value chain. So again, don't want to give all my secrets away, but I have what I think is a thesis for investment around hydrogen, and I look forward to talk to more hydrogen startups in the audience.
Thank you, everyone. You know, a big part of energy transition is policy. Government policy gets a lot of, it's become a very politically active conversation in the United States and really around the world at this point. As investors, policy support is critical as we think about the next 3 to 5 to 10 years, as we look at our investment horizons. And so, Shawn, Hossam, I know this is a topic you guys are very, very passionate about. I'm curious, as you think about policy support for some of the areas that you're looking at as investments, are there key areas that you think really need or aren't discussed enough in the political realms these days that we should be focused on?
Yeah. So I kind of start out, and I think we should be circumspect before we ask the government certain times to intervene. And be careful that you don't kill or thwart one of your best allies in the war on sort of fixing this issue, and that's the markets. And, you know, I don't criticize what's come heretofore. It's all done with great intentions, and I believe that. And it did help, and actually was instrumental in bringing the cost of solar down. Absolutely. The policies that Europe put in place, Germany, Spain, and those other countries with feed-in tariffs, our approach with tax equity, it brought it down. But once it reaches the level that it's competitive, then it should be allowed to participate in the markets. And because you shouldn't destroy the power markets or the capital markets. There are 2,500 firms that signed on to the UN PRI, Principles of Responsible Investing, representing $82 trillion. If you create a keyhole, a pinhole really, of tax equity is the conduit from which projects get sanctioned, you crowd that off. And if you destroy the power markets, you don't allow them to compete. And because I actually believe that today, solar would be the dragon slayer in markets like this here in Texas against much of the thermal assets that are there. It's that the mindset has been, well, we need tax equity, we need tax equity. But our math shows you actually don't. And so I would just say, be careful when you're approaching this. There's another question, and that is, who should pay? I mean, subsidy doesn't change the cost. What subsidy does is changes who pays. And it takes it from the user to just this invisible, the government sort of thing, which is actually everybody else. So my cousins in Mississippi are paying for my power here in Texas. So I think we need to be careful about that. Does that have an unintended consequences in terms of a disregard for something that's precious, energy? You know, do we then start, as I have seen some renewables companies, hunting for marginal energy consumers so my projects can go forward? That doesn't seem the right way to go about it. Another way might be, and if we do believe as a democratic society that there is a cost associated with putting carbon in the air, and people talk about this, But make energy bear that cost. Make energy actually represent the full cost, whether it's the carbon that goes into the air, the military that protects it, or whatever. Even wind and solar have a carbon footprint. So we should not really be encouraging waste. We should be encouraging efficiency. So that would be my sort of grandstand point right now on policy.
So I'm not the expert in policy, but there are a few things I know. One is more policy, not necessarily always good, and government and intervening to pick winners and losers is always a bad idea. Markets should determine winners and losers from a technology and companies and all of that. So with that said, there are bare minimum that the government should do. And give you an example, the one I'm very passionate about. I don't know, 60, 70, 100 years ago, we decided that it's really not a good idea to dispose chemicals in drinking water and rivers, yes? So today there is a really very tight regulation on discharging in rivers. And we measure, we hold the plants to a higher standard. Even, I mean, earlier in my life, I used to run manufacturing plants in the middle of the cities. We had very tight control on what goes into waste, everything. Why are we not having something similar that what goes into the air, things like methane and all of that? So it just puzzles me why today there is no regulation around discharging harmful gases that goes into the air. So each plant should have some kind of a minimum standard to meet. So I'm all for these interventions, that government can set what is the minimum acceptable operating conditions people have to operate on. The other one that you talked about, Shawn, about tax on carbon, I think there is room for that, and I think it should be used, but it shouldn't be used unequitably. So today, for example, when you take a certain technology like EVs, for example, we should have a carbon tax on EVs because of the mining that it creates and the emissions. It takes 7 years for us to get over the emissions that the EVs actually put in place when we're manufacturing them, yes? So I think we need carbon tax rightly and equitably put on all technologies, and let the market decide which is the right solution. So that would be my point. And minimum regulations on things like emission and all of that, because people want to do the right thing, but they have different views. If you go today, and I've been doing that on the methane, talking to different customers, their definition of what's right and what's minimum is different, and that shouldn't be, yes?
Yeah, carbon taxes, it seems, is academically has a ton of support, bipartisan support, if I may add that. But it's just a political hot rod. Nobody ever running for government wants to talk about carbon taxes on users. And a big part of energy transition, we talked about, Shawn talked about 80% of fossil fuels have been used in his lifetime. In my lifetime, the global population has doubled. The last 20 years, we have been, our energy usage per capita has increased in multi-fold. And again, big parts of the world still don't even have that. And so they're still in a lower part of that curve. And so the energy usage per capita will continue to increase, not only on a absolute basis globally, but also on a per capita basis. And so as we think about energy transition, a big part of the conversation has to be consumption and how do we moderate our consumption. But it is a politically difficult topic, I think, to broach. And carbon tax, I'd say, from the industry, certainly from my perspective, I think it's an incredibly important conversation to have. And it's always disappointing that it doesn't really get as much political support.
It's risky to talk about people should pay more for energy in this headlines of inflation sort of
100%.
day. But let me just put some perspective here. When I was a kid, energy represented about 9% of the GDP in the United States. When I was in college here at the University of Texas, it peaked up to about 12, 13%, and it's been trending down ever since. Right now, it's sub 6%. It's about 5.7%. Conversely, when I was a kid, healthcare costs was 6% of GDP. By the time I left the university, it was over 10%. Today it's 20%, and it's growing at a rate of 1% greater than the growth rate of GDP. It's predicted by 2030 to be close to 30% of the GDP, and yet what we're worried about is paying a little bit more for energy or carbon tax. I quite frankly don't understand why that's the headline grabber.
Yeah, you're right. I mean, talking about energy underpins really everything we live and see and do. It enables all our lifestyles. And yet, energy cost and what that does to our cost of living, it's a tough conversation. And certainly the last 2 weeks with the geopolitical tensions around the world and gas prices rising around the pumps everywhere in the country, it again becomes a politically tough conversation for both parties, really, in America, to talk meaningfully about what carbon taxes mean and what consumption or what impact consumption needs to do. I feel Europe does a much better job, at least culturally. There's a better understanding that there needs to be a difference in consumption, and people are willing to ride bicycles and things like that.
Don't tread on my right for cheap energy.
There you go, yeah, exactly right. But to that point, as we talk about cost of energy and the geopolitical tensions around the world these days, it's a timely question. I wonder what your perspectives are on what does the current Ukraine crisis do to governments' wills, certainly in America and around the world, as we think about energy security. Energy security has always been an important consideration for governments around the world, but it's now brought it to the forefront again, not for the first time, but again, where it is now a popular topic of discussion. Everybody is feeling that pain point. What do you think this particular situation does to both government's will as well as the social and capital will to continue to invest in the energy transition sector?
The oil crisis of the 70s begat an effort for energy efficiency in the United States. This sort of also kind of highlights, and you take a news headline and the people on the drill camp say, well, this means we need to drill more. The people on the renewables camp says this means we need to do more renewables. I'm not going to wade into that. Everyone can have their own biases, but I think it does sort of highlight, like it did in the 70s, that we need to start paying attention to a lot of things like where does our energy come from? I think Putin's going to not to be viewed as savvy after this move, and that people will be nervous about relying upon Russia because of these actions for their national security for gas. So they're going to naturally do what they have to do to protect themselves, and that's going to be looking at alternative sources, which, Europe turned on coalers now because you got to keep the lights on, And this is an area that's led the world in terms of the Green Revolution, but the Green Revolution, yes, but not in darkness.
So, Shawn, you say they led on green, but, between Germany, Spain, India, and China, we've put 50 new coal plants last year, one a week, yes? And coal consumption has been the highest ever in our history as a society last year. Same thing as wood, yes? So I would say we're making some improvements, but we're not there yet, yes? So to answer your question about how is this changing, we've seen Germany building 2 LNG plants that they never thought they would build before, yes? They're going to rely more on coal, yes? But also natural gas from the US and other places. Because energy security is real, yes? You could, some of you who maybe lived in Houston through last year in the cold freeze and we didn't have electricity for a week. This is life no one want to have, yes? So energy security is going to shape the decision, and I think it's going to be getting people biased toward how do we fix what we have and secure it rather than totally replace it, yes?
I agree. If you look at China, you might say mercantilism, or you might say being practical. In terms of their sort of energy mix, right? They're building coalers like crazy, but they don't have a lot of indigenous natural gas that's been exploited so far, or oil. So for security reasons, they own 3 industries that are strategic for them: the solar industry, the battery industry, and the EV industry. There's a certain level of pragmatism that's associated with that from a national security perspective. as well as the environmental perspective.
I think there's a question in the audience there. You can shout it out, maybe we'll be able to hear it. Okay. It's right over there.
You can
by
come
the
up here and have
camera.
mine.
Thank you. Pierre with the Swiss Embassy. I wonder if there is a discussion around nuclear and investing in nuclear energy in the US. Because I think it's the big elephant in the room, and I was waiting for somebody to speak on that. Thank you.
Yeah, I don't think we skipped that deliberately. It really, my own view is that it certainly is going to be a big part of the energy mix around the world, in just like natural gas. What I will say in the US, it feels like the discussion, I think this is true around the world as well, the discussion around nuclear still has some traditional biases and perhaps well-founded, but it tends to be a little bit more of a politically difficult conversation in the United States around nuclear investing. And so as I think about, and a lot of us come from the traditional energy space and have watched natural gas over the last decade in the United States bring down emissions dramatically. It's been the single greatest reason why the US leads on emissions reductions today. And so I wouldn't be surprised if natural gas is where we put our bets, and perhaps less so on nuclear. But again, I'm not a policy expert, and it's not an area we invest in, but I do believe that it needs to be part of the energy mix. I just think it does have a few more political hurdles and social hurdles to climb. Because devastation around nuclear can be, people don't forget that easily, and it's very hard to get over. But I don't know if others have a different perspective here.
I 100% agree with that. And I mean, we've seen the emissions coming out of Germany actually go up when they moved away from nuclear and went more to wind specifically, because they had to get base load using coal, which is actually going the other way, direction. I hope we find a way to get nuclear more in the mix, because this is the cleanest way you can reduce emission. Unfortunately, in the US, you still hear in the news, like in New York, for example, they shut down 2 nuclear plants and they replaced them with natural gas. It's great, it's not coal, but it's still more emission, and we shouldn't have done that, yes?
I'm not a nuclear expert. One of my partners is a nuclear engineer and had worked on a nuclear project before. And he said that, because this topic always comes up, the regulations just to do rebar on the driveway is like that thick in the United States to do nuclear. So the cost to build and the cost to maintain, because of the reasons that you mentioned, the safety concerns have built up a bureaucracy and a safety gauntlet that is nearly impenetrable in order to be able to make the math work from an economics perspective today.
But, I do think that the U.S. can and should lead on the natural gas front, and it's not, for me, it's not quite nuclear in terms of how we think about risk, etc. Certainly, but we've got prolific reserves here, and you'll see, I think, if I were to predict political leanings here in the US, I would say we were more likely to lean into natural gas than we are into nuclear. But again, that might change, and energy security is an ever-evolving conversation, I think. So we'll see where that goes.
Just a slightly point to say, I think we do have a problem, and maybe nuclear is part of that solution. 70% of the world population is actually the east of the Persian Gulf, and the next billion people that's going to come in Africa. So Africa does have some energy sources, but China, India, they have predominantly coal, yes? So we need to solve this problem, and the problem of either finding a way to provide natural gas to replace them, or help them build things that are safe, like nuclear, to solve this problem. Plus, the average age in developing countries versus developed countries is way different. Many of the emerging countries, their actually median age is 25 and 26. So we have a big problem. If we do nothing, I don't think it's sustainable, and we need to solve this problem.
Thanks, Hossam.
Can I ask a quick question?
Yes, of course, please.
So I'm really happy to hear all the upstreams at this table talk about the energy transition. As a former power market, capital market professional, I've noticed something very interesting happen in the capacity mix. You have renewables and non-renewables, but now you got technology that is actually coming online. I think, Shawn, you hit it bang on, right? You got the co-located and the located storage facilities going up. But there's a challenge because electricity is a byproduct of something burning. We don't have the capacity to do a carry trade on that. We can't store it like we can with the other fossil fuels. So do you think from the upstream side, from an investment, the investment should go most on those technologies that is going to create, as our CEO and founder says, the electron tanker. We need an electron tanker to take the byproduct of the energy to store it at a grid level basis. And same thing with Texas and California, you have so much curtailment that just happens every year over over a terawatt hour that's just lost to nothing because you can't make non-dispatchable dispatchable. And then my second question is on the policy. So the Yom Kippur War put energy export ban into America. 2016, Obama lifted that, and I think it was because of America's discovery of fracking and shale gas. So my two questions are, one, in this energy transition, where do you see storage playing that role for the short-term, mid-term, or long-term grid reliability? And two, in terms of the policies, where do you see liquid natural gas playing a strategic role since U.S. is one of the largest reserves in the world?
Great question. So if you look at some of the issues that you talked about, the duck curve and the curtailment that happens because of solar, typically that's an intraday issue. I mean, not exclusively because you have the hydrology that goes on in California as well, but we're going to face a similar type of situation we already do in the wind in West Texas. So the type of technologies that's already existing with lithium technology can cover the 4-hour shift that's actually required for a large portion of what you would need storage capacity for. And there's a lot of work that's going on to sort of the longer duration storage. So it's not there yet for the longer duration storage, but we do have pumped hydro. It's just that there's not as many locations to put pumped hydro. So people are trying to crack the code on long duration storage to make it economic. In the meanwhile, since it is a smaller, at least our view, I've had this debate with people, it's a smaller percentage of the energy shift that's required. So we're hitting the sweet spot, if you will, in terms of what you have to shift. So that really does accommodate allowing more and more renewables to be built, which is important. But you can manage the rest of it through gas turbines. And yeah, okay, it's not net zero, but we're arguing about a percentage of generation that's declining over time, which is a good thing, and then the technology will catch up for the longer shift. And if you've got technologies in that, I know a lot of people working on it, that's fantastic.
I agree there are a lot of people working on energy storage. I'm so encouraged to see that, especially pumped hydro. It can combine some oil and gas experience with that. And I'm seeing some people working on gravity-based energy storage. That's also pretty exciting. But in terms of renewable power, people usually think renewable plus energy storage. But I like to point to another form of renewable power called geothermal. That's one of my first investments that I worked on when I joined BP Ventures. There's a lot to like about geothermal if it works. The company we invest in is called Ever. It's a closed-loop geothermal company out of Canada. It's baseload power, it's dispatchable, it's clean, it's using Earth as a giant battery, so it's renewable. But while I was working on that investment, what got me really, really excited is actually thinking about all the transferable knowledge we get to take from years of working in oil and gas. I have a lot of love for oil and gas, having worked in it for more than a decade of my career. Even though right now I'm a clean tech investor working on this side, which I love, I'm passionate about it, I have so many friends still working in the industry, working on oil and gas. If geothermal really takes off, all these transferable power, all the subsurface knowledge, instead of drilling for oil and gas, we can be drilling for hot rocks. So thinking about the human capital we get to bring along and retain all these talent, that's what gets me really, really excited about geothermal.
I agree with all of this, and I think storage is key. And actually, I'm very excited about geothermal. Geothermal has been focused on areas where the rock is hot, close to surface, but there are emerging technologies that could get us deeper. And theoretically, if you can get deep enough, you could have geothermal anywhere, yes? And if that becomes true, I mean, we make a lot of progress, both on emission and energy availability.
To answer your question on LNG, I'm a big proponent of natural gas, and I do think LNG is going to be a big part of the mix. And it's only getting highlighted over the last 2 or 3 weeks as Europe is trying to figure out its gas needs. If it doesn't come from Russia, where does it come from? And I think the US is very well poised and very well positioned to play in that game. So I do think natural gas is going to be a big part, and LNG from the US can be a very important component of that. Well, that sounds complex.
But whether it's concerted or the markets work, yeah, that was.
Yeah, I was going to say, I think the markets work that way. I wouldn't say more as a concerted effort.
It will go to a home. It will go to a home. Yep.
Yeah,
it will.
That's right. I think we have a question in the back of the room as well.
Yes, my question is more about just VC mentality. I've heard sexy, yes, hydrogen, everybody wants to invest in sexy, but I've also heard commoditization of solar, and then I've also heard Shawn talk about the concentration, so basically lowest cost. What is VC's willingness to invest in non-sexy, like solar again? Because it sounds like in our approach with the startup, you guys are willing to invest in hydrogen, sure, but we've invested in solar, it didn't work, so sorry kid, you gotta go now. And we're just trying, what is appetite for boring risk?
We invest in boring all the time. In fact, we stood up a company to be as big of a solar company in Texas market as possible. They're at 5 gigs right now, in terms of a land bank for just solar, because we like boring a lot.
Yeah, I would think about this as a cost of capital question, and there is a continuum of investors along the cost of capital curve, and then there are those who are willing to take a significant amount of risk, but then also expect a significant amount of return for that, and maybe hydrogen falls in that particular camp, if you will, because it's still very early stage. And then you can think about more established private equity funds, the kind of capital that Shawn manages. There are other big funds who do this. Pension funds are looking at this. And so it depends, depending on what your business is, there's capital for it. I would say it's plentiful, frankly, and there's a ton of appetite, to Shawn's point, to scale up some of these technologies and to continue to expand and almost make them industrial technologies. But it depends on what your game is. If you're a very early stage company where technology yet needs to be proven, then I think investors will look for commensurate returns for taking that risk. If you're playing in more established or industrialized technologies, then there's a different type of capital pool that's willing to look at that as well. So, for example, my fund isn't even big enough to be able to play in some of the technologies that Shawn looks at, but he's got a larger fund that is able to take that kind of sort of capital scale, if you will, and play at a different risk spectrum, if you will. Is there any other questions? Oh, I see you there, sorry.
Yes, hi, good morning. Thank you guys for being here. It's really important to get the capital and us guys talking. Do any of you guys do any seed stage investing, emerging technology investment?
Short answer is yes, we do. And thank you for being here. Without all the startups, I have nothing to fund. So thank you to founders for being courageous. I can elaborate a little bit on the returns we look for, if that's helpful. Mm-hmm. So in addition to the financial returns, I'm sure Shawn and Hossam all seek, being a strategic investor, we have a strategic value that we together combine with financial value. It has to chin the bar of 25% IRR. With that said, I do look for a baseline of financial value, because if a financial value is not there, if the strategic direction changes, how can you stand up on your own without being bankrupt? You have cash flow issues, and a bankrupted company delivers me 0 strategic values. So hope that's helpful.
Well, I'm looking at pre-revenue seed stage versus, post-revenue returns to your investors. Do any of you guys have any?
We do seed stage. We have an incubator. We've actually seeded 10 companies, and out of the 10, we have 3 of them that went on to do Series A with us also. So yeah, happy to talk to you about it. What the things we don't do is we don't take science risk. So sometimes people are early and also don't have the science down. Mm-hmm. But if the science is understood and there's actual prototypes and things like that, we can participate and see.
Likewise, we do some seed investments as well, but same thing as Hossam. We tend not to take too much science risk yet, but we can talk about it after this. We've got another question in the back of the room there.
Hi, thank you. Do you have any comments on ethanol or HVO in terms of transition for liquid fuels?
Anybody here who has an expertise in that? Unfortunately, that's not my expertise, so apologize.
No.
All right, we got a few more minutes. Any question right there?
Yes, hi, good to see you all again. I think one of the things that's really interesting about the energy transition versus startups that are investing along each of the static points, so kind of pure clean energy, oil and gas, utilities, et cetera, is that the industry as a whole is changing right now. So I'm just curious, for those of you that have had careers investing in firms that were in saturated markets, that the market rules were very much established, how have you had to change your investment thesis to think about evaluating companies that are trying to gain traction and trying to hit certain milestones and metrics to demonstrate success, but are doing it in an industry which is rapidly changing and transitioning itself and kind of redefining the rules for what success looks like?
It's a great question.
Yeah.
Maybe you want to take it?
I can. This is a great question, and we struggle with all the time because I could look at traditional oil and gas or technology and say, okay, here's like 5 players. This is a new technology. I can take share from these players, and here's the spend every year. And by the way, if I go back, I know in the up cycle how much it was, and the down cycle how much it went to. So 100%. Versus let's take like the emission monitoring investment. This is new, and we don't know the market, how it's going to go. We don't know the structure of the service companies. Is it going to be vertically integrated or not? So we spend quite a bit of time trying to understand that as customers. We do maybe 2 or 3 times as more diligence. And to be honest, it really comes down, after we do all of that, is our belief in the entrepreneur and the team. And are they the ones who are right on the application, have the expertise, and ready to pivot with us as things materialize? So we do spend or try and approach it this way. We made an investment in an electromagnetic company that just measures fluid propagation. Yes. And after a while, we understood the market better, and then we went and did more acquisitions to bring more technology in to complete the offering. So that we could also do together with the right team, yes?
Thank you. It's a great question. We can talk more about it at the back of the room after this panel. I think we've only got a couple more minutes, so unless there's any more questions, I was just going to say, as closing remarks from any of you, we all have chosen to build our businesses in Houston, and there's always a question of what makes Houston special as we think about the energy. So Shawn, Hossam, Grace, anybody wants to talk a little bit about Houston and why we're building our businesses in Houston?
Well, I'll say something. So there's a myth of a famous bank robber from the 90s, Willie Sutton, where a reporter asked him, "Why do you rob banks?" And purportedly he said, "Because that's where the money is." When you look at the energy business, in terms of energy private equity, there's 2 cities really that dominate. It's Houston and New York. If you look at the rest of things, there was a trader. Energy trading is Houston-centric. Houston-centric. If you look at the industry that has upstream drilling, the chemical complex, the logistics of energy complex, all roads kind of point to Houston. So I would say it's the money plus, and it's just a great place to live.
Thank you. Thank you all for joining us. We're going to be at the back of the room if you have any other questions.